Anupriya from QuantInsti, and thank you for joining our presentation today on careers and jobs in algorithmic trading. Now before we start today, let me introduce myself and take you through our agenda for today. I'm a director here at QuantInsti, overseeing the marketing and product development teams. This is our second webinar in this year, and we are very excited to see repeated names in our attendee list. While our previous webinar was on generating alpha using high frequency data analysis, today's session is not a technical presentation describing a trading strategy or a trading technique. Today we have a panel of speakers, all practitioners and experts in financial markets, who would share their experiences as quants, traders, and team leads at algo HFT prop desks and brokerages. Before introducing our esteemed panel of speakers, let me share a brief agenda for today's session. Thanks to our enthusiastic audience group, we have received over 200 questions to be covered today. From those, we have selected the most common and most relevant questions for the session, and we will discuss those during the panel discussion. We will talk about skills required for algo and HFT roles, discuss a few interview questions. We will talk about resume shortlisting criteria, different languages required for different roles, salary packages, and so on. A few questions which were addressed to our placement team would be taken at the end in a presentation by QuantInsti team. And immediately after that, we will open for Q&A. In case we miss out on any question which you had raised, it will be a good time to discuss, to raise that again during the Q&A. We would not be taking any questions in the middle of the panel discussion, hence it's best if you give your questions at the end. So without much ado, let's get started. Our first panelist is Suneet from iRage Broking. Suneet leads the team of HFT developers at iRage, which is a leading HFT firm in India. A trained computer engineer, Suneet has created and managed low latency platforms for over 7 years. Thank you, Suneet, for being here with us today. Our guest speaker today, Mr. Puneet Singhania, is a director at Master Trust. Master Trust is one of the biggest brokerage houses in the country and provides technology solutions to their client base. Puneet handles a team of quants and traders for prop desk. Thank you, Puneet, for joining us today. Our esteemed EPAT alumnus, Mr. Gopinath Ram Kumar, is also joining us today. He has worked in different sectors where he has applied the quantitative skills and knowledge he has gained through courses and on job training. He started his journey as a software engineer and has spent around 5 years in the financial markets now. Thank you, Gopinath, for joining us from all the way in Poland. We wish you all the best for your new journey and new job starting there. So we start with the questions now. Okay, so our very first question is regarding entering this new and mystical field of algorithmic trading. What is the one thing that anyone who wants to get into algorithmic trading must know? I would request Suneet to take up this question.
Yeah, hi Anupriya. Thank you for that introduction, and thanks for letting me go first at this one. So I think the one thing that everyone needs to know is anybody who's entering this field is algo trading does not mean it's free of all human intervention. All it means is that the point of human intervention moves behind the scenes, so to speak, into research and actually quantifying the logic onto a program itself. That does not mean that you code up the program and then you click a button start and it just keeps running on its own. That's not what it means. Almost every strategy that I have worked on has had to be overhauled at least the longest probably would be 6 or 7 months. So typically one would continue to be involved in terms of understanding what what the behavior has been, how it's working, whether it's working at all or not. So that misconception needs to be thrown out of the window.
Yeah, I agree, Suneet, and that's a very important part, important information that you have shared. Often we also hear from our students and inquisitors that algorithmic trading is basically, you have one strategy which has been doing good, you just automate it and that's it. However, a lot of effort goes into actually coming up with what strategy you need to take in the live markets. So thank you so much for that point, and I would also invite other panelists to share their
Hi Anupriya, can you hear me?
yes, Puneet.
Hi everyone, this is Puneet Singhania. So just to add to Suneet, I think what's important to understand is that a lot of people actually confuse automation with quant trading. So Suneet has made a point over there, and apart from that, my sense is that each one of us needs to understand that there is no holy grail in algo trading or quant trading that you might end up with a strategy which is going to continuously keep on winning over years and years, and there is you need to keep on working on your strategy, on your system. So most important part is that you need to understand the risk and reward, knowing whether your strategy has an edge or not. These two things are extremely important, and then you can obviously try and figure out what frequency you want to work on, what leverages you want to use, what instruments you want to trade, and so forth, so on. So knowing the edge, understanding risk reward, whether it's suitable to you or not, is extremely important in my opinion, in my experience. People tend to start with, oh wow, I've stuck on something which works really well, but without
Right.
understanding these basic concepts, they end up hitting up the wall when they run it live.
Right. Very, very valid point there, Puneet. So we have two main points mentioned here. One is on the work that is required in the background before you take your strategy live. And there's no holy grail, there's no one strategy which will keep giving you results. You have to keep updating your systems. And the second is on the importance of the quantitative analysis which goes behind building up that strategy. So it's not just about automation. If you actually come up with a very good quantitative strategy, you can even, it's even useful for manual traders. Uh, the whole idea is to learn the skills of the game, of the new skills which this trading requires. So thanks to both the panelists there. We move on to the next question, which is very relevant from the skill sets point of view. So what is the one most important skill set that you would have to pick in a candidate? What would it be? Sunil, would you like to start?
Sure. I mean, I would always look for more than one skill, but if I were to pick one, the topmost would be that I'd like to go, I look for a very analytical approach to problems and try and see if a candidate I'm interviewing has a very objective way for justifying his solution, and if he has thought through the pros and cons and, understood the problem beyond its surface. The participants involved in the problem and how each of the participants are interacting and so on. So as long as that analytical problem exists, the next step probably would be to see if the rest of the tools are in place or not. But this basic is priority number one.
Okay, would you like to share some interesting question that you ask to actually test this skill in an interview?
Yeah, sure. One of the most common things I keep reading on a resume today is that typically people claim to be data science experts. So the thing is, it's a very hot field, I guess. So it sounds nice on a resume, but what I'd like to see is how if they can really back it up. So I give them extensive amounts of data to really understand. To really drive home the point, the scale of data that exists, and without any problem statement, I would normally ask them to find patterns, whatever they can find in a span of a day. They can go home, Google, do whatever they want, but as long as they can come back with a pattern or any kind of a objective observation about the data that they have. So typically it's a very open-ended problem. And I really like to see what they really look for when this kind of open-ended situation is thrown in front of them.
Okay, very interesting. Thanks for sharing that, Suneet. Moving on, asking the same question with from Puneet.
Puneet here, yeah.
Yeah, Puneet.
Anupriya? Yeah.
Yes, I can hear you.
So that's very interesting what Sunil just shared. And for somebody like me who really does not have a very strong programming background, throwing somebody such data science questions or such large data sets actually presupposes that he understands basic programming or he knows basic programming. And so I would like to say that basic a candidate should have a reasonable level of programming skills with a strong background on statistics and calculus, because ultimately at the end of the day he would need these tools and these understandings to implement something, some strategy, some concept, some idea. And so if this is missing, it's not impossible to actually learn it on the job, but really for an employer, if somebody who wants to get into quant trading and he does not know programming, does not understand calculus and statistics, I think it's a no-brainer that even if that guy has very logical thinking, the time to market for his ideas will be very, very long, or he'll be trained on resources other than himself. So that in my opinion, these are the basic skill sets which are required.
Right. No, I agree with you completely. So these are programming and maths are the core of algos anyways. So, but then how do you actually decide that this person would have those skill sets? Does it mean that he should have the required academic background, or somebody who has come from different background, say from a commerce side, but has picked up programming and has picked up mathematics as well? Would he also be eligible?
Absolutely, absolutely. I mean, it doesn't matter how you pick up. So what matters is that these are pre-qualification criteria.
Right.
I mean, you could be coming in from maybe an arts background, but still understand programming and able to do basic programming and good at calculus or understand, appreciate statistics.
Right.
It
So
doesn't matter.
most likely a test or something which you will take so that to actually evaluate that these skills are there in the candidate.
Yeah, yeah. So largely in an interview, it's not easy to fake these things. So no
I
test is
agree.
also required. Yeah.
Right, right. Okay, what would be the second most important skill after programming and maths?
So, so I think these are two important skills:
Okay, okay, got it.
programming and mathematics and basic understanding of statistics.
Okay, okay, got it. So I'll take this question back to Suneet and ask him what would be the second most important skill that you would pick after analytics, analytical thinking.
Yeah, so I mean, I think Puneet has already answered most of that. So once you are past the basic objective thinking bit, it's more a question of whether you know or know how to use the tools to actually which help you do it. Now, most people might be very adept at Excel and the basic tools, but the problem with HFT is the data sets are really huge.
Mm-hmm.
Like, so they need to know uh, some form of tools to some tool through which they can really scan through a lot of data or basic scripting to sort of filter out data at least, and those kind of basic skill sets. Programming is
Mm-hmm.
obviously there depending on the role. So if his role really involves implementing something, then definitely he needs to be a very good programmer as well.
Right, right. Agreed. So what we have established here is that programming, maths are two skills which are very important. So if you have analytic skills, you have, it's something which you need, and on top of that, you should know how to use the tools to use your analytic skills. Thank you so much for answering these very important questions. We move ahead. Uh, so we have actually already established answered first part. So do quants need to know programming? I think both Puneet and Suneet have clearly mentioned that programming is a must. Programming as a tool is a must, especially from the HFT point of view. What we also need to understand is say a programmer, a technology guy, does he need to understand financial markets? I'll take the question to Puneet first.
Yeah, sure. I mean, a techie should understand financial markets if he wants to do something in this particular domain, because because if you do not understand basic financial markets, the basic jargon, then at times he can get simply lost into what the other person is saying. So yes, it's a clear-cut no-brainer that a technology guy should understand basic finance. And maybe because we're talking about the context is here is quantitative trading, so he should understand the data sets pretty well.
Okay, so if there is a guy, say from a very reputed, say engineering college who has excellent programming skills and comes from because he has studied quant in college, he obviously knows maths very well. Would you be
Mhm.
hiring him in your team? Because he definitely does not have any financial markets knowledge. He has not studied that. He's a fresher.
So you see, talent acquisition is obviously an important aspect. So whether a person is a fresher or not, if he is talented, then experience aside, you need to really recruit somebody like that person. And he can pick up experience over a couple of months or maybe a quarter, 2 quarters. So the answer to it, yes, to it is yes. Why not?
Okay. So what kind of training would you be, giving him so that he actually understands these financial markets, the required knowledge in financial
Yeah,
markets?
yeah, sure. So the way we look at it is that somebody who comes with a mathematical and a programmatical background, he already has a very decent logical thinking process in place, right?
Mm-hmm.
So for such a person, it is not difficult to pick up things as you kind of put him in the environment where the real action is. So what we try to do is for a substantial portion of his working hours in a day, we try to put him with the risk guys or on the trading floor or with the back office guys, as and what the time permits of either
Mm-hmm.
parties involved, to bring him
Mm-hmm.
in terms with the terms used, the nuances, and how discussion is going on. And from there on, after a quarter or so, I think largely the guys pick up from there.
Right. So
Of
it
course,
takes
for a
about
major part
three
of
months.
their yeah. So of course they're working on the data sets, they're working on the exchange feeds, adapters, etc. So that process is anyways going on in the team which they are. But
Mm-hmm.
when they're interacting with these the other guys like the traders, the risk guys, the back office put together, they understand things with a very clear perspective, uh,
Mm-hmm.
and which
Right.
is very helpful in my sense.
Agreed completely. Yeah. And actually that they will also get a very good training in this hands-on fashion. So thanks Puneet for that. I'm going back to Suneet because I believe Suneet you hire a lot of technology guys in your team. So how does it
Yeah.
work? Yeah.
So, do quant needs to know programming in an ideal world? Yes, definitely. But different firms typically approach it differently. So, depending on what their strengths are. So, probably a quant heavy, as in a firm whose strength is basically on a model which is very quantitatively driven, might need their traders or quant guys to know programming, but to a limited extent. But if it is a firm that's really focused on low latency strategies like say arbitrage kind of strategies, uh, then they would need to know a lot of programming and really need to understand computer science as well.
Mm-hmm. Right. Uh, and okay, in that case, so the quant role will be similar to that of technology role. Will there be a big overlap?
I mean, again, so it's the best case scenario is if the quant codes it up himself. There's no doubt about that because there's always some sort of a misinformation or information loss that happens when person A communicates his idea to person B and B implements it.
Mm-hmm.
So the best scenario is if he can build it up himself, at least to some extent where it becomes a proof of concept.
Okay. And then what does a technology guy typically do? Like if quants are they are coding themselves, then what role would technology guys play?
Right. So again, so in an ideal scenario, there should not be a separate quant guy and a tech guy, but typically tech guys do two different things. One is a part of them work on infrastructure, which is directly connecting to exchanges and building that layer and maintaining the platform itself. And
Mm-hmm.
there is typically another team which works with the quants to implement the strategies and optimize it. And especially in the low latency game, optimization is really important. So it's probably much more important than the model itself. So you need to be fast while being almost right. So in that kind of a strategy, the optimization becomes really important. So typically the techs take a basic idea and sort of optimize the hell out of it.
Right. Mm-hmm. So for that, obviously, the technology guys would obviously should be able to understand financial markets very closely to be
Yes.
able to
So
optimize the strategy.
definitely. So the basic understanding has to be there. Otherwise, again, it will be Greek and Latin when the communication is happening. But
Mm-hmm.
yeah. So what we also do that's probably the reason why when we hire techs, especially those who are straight out of college, we make them go through a basic market microstructure course, and so that they at least understand what the market dynamics are and what the typical the usual terms that are being used, they don't have to go
Mm-hmm.
back and look up Wikipedia to figure out what it means,
Mm-hmm.
and they should be able to comprehend the idea straight out.
Hmm.
As
And what are these usual terms usually, like, for our audience so that they can go back and read about it?
So we've had instances where a lot of our techs are hired straight out of college.
Mm-hmm.
So quite a few of them did not have an idea of what a bid and ask is, what
Mm-hmm.
we meant by an order book. So if a quant
Right.
is going on using that order book term and the other guy doesn't actually know what it is, the whole
Mm-hmm.
idea is lost.
Right. Right. Got it. Okay. Thanks so much, Suneet, on that. And we hope our audience learned, would keep these terms as a check mark. These are the some terms that you should know if you're planning a career in this field. So moving ahead, I guess a part of this question we have covered. However, we still need to understand, because we get this question a lot, which technology is most apt for HFT? And there's always this discussion on whether Java or C++ or C Sharp. So Suneet, from your experience, can you throw some light on this question?
Yeah, so from what I have seen, almost every strategy undergoes a typical life cycle where it's conceptualized, then the premise is tested out, some assumptions are wrong, so they are corrected, again tested out, and finally it goes through implementation and deployment and actually running it. So
Mm-hmm.
during the conceptualization and testing out, it's very easy if you know if you have a framework ready, which Python makes it available. It's basic scripting, and there are a lot of libraries that are already available to even visually render your results also. So
Mm-hmm.
for that part of the life cycle, Python is very apt.
Mm-hmm.
Python could also be extended towards strategies which are still HFT, but are not their entire emphasis is not latency alone.
Mm-hmm.
But so again, so if the strategy, however, demands that latency also be minimized to the least possible, then typically the choice of language would move towards a very architecture sensitive language like C++, so that the programmer is able to really build it very close to the computer's architecture itself and optimize it that much more. So now when it comes to a firm, because they need to build one platform and maintain it, it's much tougher to maintain a platform for two different languages. So if the firm has even one latency sensitive strategy, then they would prefer building a C++ platform, and that's what they would use. Versus uh, otherwise, is in, for the for the sake of uniformity, you might go for C++, but there's that only really makes sense when latency is of utmost importance.
Right. Yeah. So if you're going for very low latency strategies, then C++, and if you're going for medium high, for medium frequency strategies or low frequency strategies, or even if you're going for just testing out on your idea, your hypothesis, then Python is probably a good language to begin with because
Yeah,
it's also very easy to understand.
yeah.
Right. Okay. Thanks, Sunit, for that. Hold your mic because I have another question for you. So if I want to set up my own desk and have good results, returns to show and good trading experience, you can understand we get this question from traders, mostly individual traders who runs small prop desks and have been doing really great manually and now want to go algo, they want to automate their strategies. So what are the steps that they should be taking and what type of team should they be creating?
Oh well, if someone has come forward and said they have really great results to show, then and they're thinking of automating it right now, surely their ideas are not very latency sensitive because they would not have had a platform to test it out in the first place.
Right.
Uh,
Absolutely.
so now having made that assumption, it makes a lot of sense for them to sort of put that part of technology aside, buy an off-the-shelf solution to build up their strategy on that platform, and then so that at least they can pick their battles, they can fine-tune their strategy first without worrying about the technology itself.
Mm-hmm.
And once that is done, maybe they can think about going forward, building their own platform, if that makes sense. Because building a platform itself would take, from scratch, would take anywhere over a year easy to make it stable
Right.
enough. That's one. So they might want to choose a off-the-shelf solution to actually uh, uh, fine-tune their strategies first and make it profitable enough to invest that platform building time. That's one.
Mm-hmm.
And the second thing is there's a lot of, again, the compliance issues. It always works best if you're working in a shop inside a shop kind of a model, so that someone else, someone who has the compliance framework in place is able to take care of it for you. So that again, that headache is off and you are focusing on the primary battle of the strategy alone. Um, that's
Right.
a useful way to go forward. The
Mm-hmm.
last thing I think is, which is very often ignored, is to actually have a risk management setup, especially if you are coming from a manual trading world, because in the automated world, when things go wrong, they go wrong. They go really wrong.
Mm-hmm.
So there needs to be an independent risk management team that which is not a part of the strategy team, that sort of manages and makes sure that all risk checks are being honored.
Mm-hmm.
Uh, and very often when someone starts, we are very anxious to go live, so we ignore this part. But it's a ticking time bomb. So I suggest you need to at least have someone look at the risk from day one.
Very valid point there, Sunit. I completely agree. And risk management is one of the things for which algo keep getting the backlash also, even though it's again and again highlighted how important it is.
Yeah, I
So
think
yeah,
their anxiety to go to market, a lot of people, some one participant makes a mistake and all of us get blamed for it.
right. Yeah, and I think but SEBI and the regulatory body has good checks in place so that at least there are some basic risk management tools in place, right?
Yes, so the exchange itself has a lot of risk checks in place.
Mm-hmm.
In fact, even before you take your strategy live, you need to demo it and make sure that all the risk checks are being followed from your side also. Uh,
Right, right. Yeah. Okay, great. Thanks so much, Sunit. Yeah, so we now move on from again starting your own desk and entrepreneurial side to if you are say looking for a job, what are the things that you need to put in a resume, especially if you're going for a developer role and if you want to work on adapters, so mostly on the programming side. So I'll ask Puneet to share his thoughts on this. So what are the things that Puneet you look in a resume while shortlisting for developer role?
In our firm, as far as a person's coding skills are to be checked, there is a separate person who really looks into it. But holistically speaking, if you would ask me, if I'm sitting with a guy and I'm going through his CV and trying to assess his candidature, then usually I would like to, understand whatever he's put on his CV, whether he really knows it or not, he or she knows it. At times, you would come across candidates who would try and put things like Sneak mentioned during the initial phase of this webinar that, somebody would put in a fancy word like specialist in data science, and at the end of the day, he might just know it from a theoretical background and would not have really worked on it. So we try and figure out whether he's being honest on his CV or not. That's the
Right.
most important aspect as far as I'm concerned, because
Mm-hmm.
my role largely revolves around the management side of the business. And on
Right.
the skill side, I have another colleague of mine who looks into it. But largely, we try and figure out whether the guy is honest enough or not. I mean, enough
Right.
is
No, I
not to
think
be.
that is, yeah, that's a very useful remark because a lot of time in order to get selected, people lie on the resume and it's definitely a very, uh, what do you say, it's a bad habit and kind of risky as well. So yeah,
Yeah.
thanks for that. Yeah,
So
sorry.
if you look at, I mean, I'll be more than happy to listen from somebody that if he's shifting from place A to place B, and the reason for shifting is, okay, he wants to make more money. That's a good enough a candid answer to really set the ball rolling. But if you
Right.
try and say things like, okay, the work culture was like that, or the management was like that, I did not agree with my boss. I mean, all these things, you know,
Mm-hmm.
it is there in an organization. You would be seeing good thing and bad thing, but the guy needs to be
Right.
really honest about the real reason for him to move from one place to another.
Right, right. And also, if you are in this industry, why should you be shy about making money? The whole idea
Absolutely.
of being in stock market is to make money. So yeah, I
Greed is
agree.
good. Greed is good.
Yeah, as long as we're not letting it affect our decisions, trading decisions.
So that's where the risk management department should be separate from the trading department.
Absolutely. Right. Yeah, Suneet, I take this question to you as well. Uh,
Yeah, I
what is
think
it that you, yeah.
the same stuff. So honesty is really important. I mean,
Mm-hmm.
people need to really back what they're writing. Uh,
Mm-hmm.
I probably pick and choose. I mean, they can say they're great at playing tennis. I don't. Well, obviously, I'm talking about the relevant areas.
Mm-hmm.
Uh, so if they say they're data scientists, they need to back it up. I'll throw a problem on them, and they need to solve it. They can take as long as they want. So
Mm-hmm.
typically, our process goes beyond days.
Mm-hmm.
Uh, and in terms of the resume itself, I I really like to see if what impresses me is when people actually go beyond their call of duty, so to speak. If it's a college grad, if he's really done, if he says he's interested in artificial intelligence, has he done something beyond what is there in the course? Has he done something
Mm-hmm.
beyond that? If he's coming from another firm, has he done something which outside of what the firm had mandated, just out of interest? Has he played
Right.
around with it?
Mm-hmm.
That sort of an initiative taking is something that strikes a chord with me, because I believe you need to keep innovating in this field. You cannot settle that, okay, I have a solution, I'm good. It won't work 6 months from now. So you need to keep innovating always.
Right, right.
I guess an
Okay, thank.
important thing could be on the funny side of it. Could be whether the guy is single or not in his initial stage of his career, because this is a very time consuming job.
Yeah.
In fact, one of my so we don't directly talk to candidates, and we actually ask them to fill up a form. So which one of the questions is what are their goals in their next 5 years? What do they want? So there was this one candidate who basically said, I want to be able to buy my own house in the next 3 years. And that is why I'm coming into this. So I was like, okay, I mean, that's honesty for what it's worth.
Right, right. Okay. Um, but we are not necessarily just looking for college pass outs, right?
No,
The
we are not.
right. Yeah. Okay, great. So we move on to one of the most interesting questions and asked again and again. So what are the salary packages for traders and programmers? Suneet, would you like to take this one?
Sure. I mean, so from what I've seen from a couple of firms that I've interacted with, and is it really depends heavily on the philosophy of the firm itself. So I've come across the entire spectrum where firms have really focused on paying the quants very well, while the tech has just been a support service. I've also seen firms where tech is everything. So
Mm-hmm.
while as the industry is moving more and more towards, especially in the HFT world, as it's moving towards where tech is beginning to play a much more important role, that's sort of equaling or sometimes surpassing in almost all the firms on an average. But my common grouse has been some very big firms have also ignored this angle for a long time, and there was this one instance when a head of desk in Optiver had actually sent out a memo, and he forgot he CC'd his tech team also in it, and He basically was joking about how little the techies are paid and we make so many millions and so on. And that became a
That would
big,
have been a
uh,
disaster.
yeah, it went viral on the net also, that entire memo. So it ended up with the guy being fired, but essentially it points out at the philosophy of even a firm that's as big as Optiver, which is one of the biggest firms in algo trading. Uh,
Mm-hmm.
but that is changing, and from our perspective, personally, we place Irish places a lot of emphasis on tech. So we come from the later philosophy where we really believe tech has as much, if not more, a role to play uh,
Mm-hmm.
uh, in the performance of the strategy itself. So we have a very simple way of actually doing it. So bonuses are always split based on the profitability of the strategy equally between the techs and the quants also. So uh, that's how we follow it.
That's great to hear how the mindsets are changing, and definitely technology uh, has a huge role to play, and in the coming years probably it will even take the lead. So who knows? Thanks so much, Sunit, there, and I request Gopinath to also share his experiences from his experiences and his background, the answer to this question.
Yeah, thanks, Anupriya. Actually, usually this salary actually varies with respect to the firm wise and also with respect to the country wise. So I have just like worked in around 6 to 7 countries. So based on that, I would like to show you some screenshot on based on my experience and what's the salary my friends has got. So in Saudi, actually, usually for a trader from an oil company, the monthly salary ranges between 6,000 to 7,500 during the year 2015. Usually, if you just think about this big oil giants and all those companies where you will be ending up in a trading job, so your bonuses will be on the yearly basis, and performances usually will be a fixed component per year. So on the same Saudi, if you are as a trader for a family office, which is actually really good, though the monthly salary would be a bit lower actually, but you can end up having a monthly bonus, usually 2 to 5% of profit, and which actually can be negotiated very good during your interview. But again, if you take about India, so India for a quant AVP level or a trader from a HFT firm, so the salary would be around $2,000 to $6,000. So and again, the bonuses will be based on the company policy, which is again negotiated during interview. So if you are taking about European countries like Denmark for a trader, so usually if you are, I have been interviewed for an electricity a trader firm actually, HFT firm. So there actually they pay on a higher end, usually with $6,000 to $10,000, and again the bonuses would be depends on their performance in the interview and how they're negotiating in the interview. So this will be like a snapshot for the salary range for different companies in different countries as per my experience.
Thank you very much for sharing, Gopi, and for being so candid about it. Actually, I wanted to ask one other question from you, which we skipped earlier. So just give me a second. Yes. So I also, because you are coming from a technology background, right? You had worked as a software engineer, and then you moved into the quant side. Currently,
Yeah.
you're yeah. So how was that experience of changing your field, and what what are the skills that you thought were most important? Did you pick up programming? What was your experience and all that?
Okay.
We'd love to
Okay.
hear from you.
Well, basically, I started as a developer and then moved into testing and then into a business analyst role and then into a trader position and then to a middle office quant for a bank. So this is my career, what you can say, profile. So initially, when I just like did programming, anyway, I started with the low latency programming, which actually Sunit, I think, has echoed it before. So I started with C++ actually. So with that said, actually, and then when I decided to move into the finance industry, I knew that, okay, there are some different components. One is like you are going into into a front office or into a middle office or into a back office. So back office, we are not going to look into it now because that will be highly dealt with the compliance and all those regulation issues. So we will deal with front office and the middle office. So in the usually the software, we have a separate programming desk and a separate quant desk. So in the quant desk, actually, usually you write strategies. The strategies can be written in an analytical language like R, MATLAB or Mathematica. So and then when you're saying about programming, so programming usually they write the platforms in this low latency programming. So you actually integrate your strategy over this programming platform. So as a quant, if you know the low latency language in which the whole stack, a whole platform is written, and then and then you know some additional analytical software like R and MATLAB, so you will end up in a good bonus pool. That is only the big difference it makes. So again, from the technology point of view, it is also very important. It doesn't matter that you have to learn the analytical software there, but you have to learn that basic, market microstructure so that he understands what has been written in that whole platform. So as for me actually as concerned, so because I am from the software background, so I already knew the low latency language, and all I have to do is just pick up the analytical language, something like MATLAB or Mathematica, and then the finance thing.
Right, right. Okay. Thank you so much for sharing that, Gopi. So we move on to a very interesting question. It's a $1 million question. Who would make $1 million first, trader or programmer? I would request Puneet to take this one. What do you think, Puneet?
A trader, definitely. I mean, that's how I would put it. You can be a programmer later, but if you are a trader first, well, you don't need anything else. I mean, programming can come second. It can probably improve your profits.
Right. So I think we have a kind of interesting on our panel here. We have different views on this question, I guess.
So you look at it from another perspective, right? Today you will probably find more traders who are trading rather than programmers who are making the bets.
Right.
Even if you look at long-only funds, long-only investors, or maybe quant traders, or maybe technical traders. So largely the sheer numbers are tilted towards these guys, the traders. And in a bull market, well, of course, these guys are making.
But do you think that is because of traditionally it was always the traders who were ruling the entire industry anyways?
So,
and
no,
now things are changing.
Not really. Not really. You see, you need to have the trading mindset in place. So I could have a trading mindset in place, and then if I see that my trading strategy is giving me good profit, then and I want to really add some more quantitative aspects to it, then I can probably go into learning those analytical language like Gopi mentioned, and then try and improve my strategy, and then eventually take it to the next level where I'm even making it latency sensitive, right, to extract that extra alpha. But my basic killer instinct comes from my trading thought process. So that is why I say a trader definitely by a wide margin is going to make his first $1 million.
Okay. Suneet, would you like to add anything here?
Oh yeah, I mean, in the sense, so I see where Puneet is coming from. I mean, ultimately, even if you're a programmer, you have to trade to make the money. But what I meant, where I differ is, I definitely believe that if you're a really good programmer and you're talking about low latency strategies, then the programmer who trades would have a far better chance than the trader who programs.
Right. Interesting. I think, yeah.
And that's typically the philosophy that's followed by firms which are very heavily into the low latency world also. So if you look at most of the HFT desks internationally, other than all those who are in the arbitrage space at least, are similar low latency stuff. Not the market makers, but the opportunity takers essentially. So typically they go in for taking in the programmers and they tend to tune them into trading rather than the other way around.
Right. Yeah. Okay, so actually this reminds me of that very interesting experiment which was done decades back in Wall Street on whether trading can be taught, whether it's an art or science. And Yeah, right. And at that time, I think before that, it was considered that trading is essentially an art more than a science. And after that experiment, I guess people started thinking, no, it can be a science as well. So yeah, that's another point for discussion, I guess. So
There is
this is our
a
last. Sorry. Yeah. Go
Sorry, I'd
on.
just like to add to that. There is a interesting company called Rat Traders, if anyone's heard of it.
Mm-hmm.
Uh, what they have done essentially is they have taken a group of rats, put them in a box, and offered, and every time the market moves up, they played a certain kind of music and offered them food, and similarly like that. And over time,
That's so
essentially,
interesting.
yeah. So over time, the rats basically figured out when they started predicting when the food is going to be offered. And this is a real firm. It's not an scientific experiment. This is a real firm.
Oh my God, that's very interesting. So, oh, sorry, what's the name? Rat Traders.
Rat Traders LLC.
Okay, okay, this is something that I'm definitely checking out after the
Yeah,
webinar.
I know. Very thanks, man.
Yeah, so okay, great. So this is the last question which we have for the day. I would request Gopi to take this one.
Actually, typical day for as a quant for me is before usually in Saudi we used to go before the day. We just like need to run the. We just need to see what are the type of strategies which we are going to work actually, and then we used to just like have a prayer discussion. What will be the maximum risk management check we have, used to do it, and apart from that, we used to check with the management how much money, how much capital to trade with. So basically, we just like do the risk management check. We just like do the how much money we are just like going to just like capital we are going to do it, and we have a categorization based on different market, whether it is a bullish bearish market, what are the different types of strategy that can fit in. So we just like try to prioritize those type of strategies, and then we jump into the market. So once during the market, actually, once the market is done, then we do the post analysis. We used to see like what are the things which have been done better, what are the things which we can improvise, and probably we just like pass on that to the. We will just like see what are the things which we can improve it from the software perspectives, which we will uh, pass on to the software team where they these guys will build up the platform.
Okay, great. Thanks a lot for sharing that, Gopi. And before we open for Q&A, we would like to first obviously thank our panelists. Thank you all for sharing, so candidly about what is it that you look in a trader, what are the skills which are important. It was a great opportunity for us and our audience today to hear from you directly, and we hope we get that opportunity again soon. We have a lot of open questions as well coming up, pouring in. We'll take them shortly. Meanwhile, I would like to invite Swati to talk about our placement services at QuantInsti. Swati is one of the senior management person at QuantInsti. She leads the placement team and has played a pivotal role in helping our participants build a successful career in algorithmic trading. So over to Swati now.
This is all. Hello. Hi
Yeah, hi.
everyone. I hope everyone can hear me and
Yes,
they are able to see the presentation.
yes.
All right. So hello everyone. My name is Swati and I'm a part of the placement team at QuantInsti. I'm here to give you a quick overview of the placement work at QuantInsti. So what placement assistant team do at QuantInsti? We explore job opportunities in quant, algorithmic trading, HFT domain, and share suitable jobs with students. We also help students in building resumes, conduct mock interviews, and also share insights from recruiters' angle. We have a placement association with more than 100 companies across the globe. These are the name of some of them. Now, a very common question that we come across all the time, and I think our panelists have given a detailed answer on it. What are the essential key required skills required to make a successful career in algorithmic trading? Right. So apart from having an understanding of financial markets, programming, and statistics, we need to understand the business environment, trading systems, technology, and infrastructure. And if you see this flowchart, that's what we exactly cover in our EPAT program, right from brushing your skills on statistic, probability to strategy development, giving you an understanding of latest trends in algorithmic trading, covering all important software, hardware, and networking topics. Now our participants come from diverse backgrounds aiming to get into algorithmic trading domain. So this will give you a brief idea on what kinds of jobs are open for you at the primary stage. So if you're coming from finance, consulting, or if you're a banker already, then algorithmic trading is the next step for you rather. If you are coming from sales and marketing background, so this you can start from being business development manager from the business development stage and then later on move to become a algorithmic trader. So we have received more than 150 jobs in the last 6 months, and we've conducted more than 88 jobs interviews in the last 6 months. 50% of our jobs have packages more than 16 lakhs, and there are almost 20% of the jobs who fall in more than 30 lakhs per annum category. So our jobs are mainly divided into these 4 profiles. Quant analyst constituted 25% of the total jobs. Then 30% of jobs from algorithmic trader, HFT trader, quant trader, and 30% jobs for IT people, coders. A lot of jobs are actually developers, coders, and IT guys. So also a lot of so jobs are. I'm sorry, just a sec. Also 10% of the jobs. Also, right. Also 10% of these jobs come from leading global trading and banking firm. Right. So that's it from the placement team. If you have any questions regarding placement, please leave a message and we'll get back to you. Thank you and have a good day.
Thank you very much, Swati, for that presentation. Hope we were able to answer some of your questions, and I guess some of the questions which are there in the chat. Venkat, please confirm if that presentation answers your question. Else we'll take it up again now because we have opened for Q&A. Okay, so let me just read out the questions here. So first question is it possible to find internships from other countries, internships remote from other countries? Swati, will you be able to take this question?
Yeah, I can.
Okay, so I'll repeat the question.
So, yeah.
Okay, you go ahead, please. Yeah.
Yeah, I got it. So internship, yes, we have actually received a lot of offers from some of the leading trading firms for internship. The best part of internship is there's no hard and fast rule for a person to be a postgraduate or have a technological background, or there's no such requirement as such. But yes, internship offers we've got from some of the exchanges also. Internship outside India, one from China, that's it for now, and we are working on so most of the jobs that we get from overseas are permanent jobs, so internship not as such.
Okay, thank you, Swati. Another question from Venkat is there a title as business analyst role in algorithmic trading world? If so, what are the skills required and what are the knowledge areas? What is the availability of such jobs in India? I open this question to anyone in the panel. So is there a title as business analyst in algorithmic trading world?
Alright, so I'll take that. Generally the titles could be anything. So it depends on what kind of work the firm has asked you to do. So a lot of times quant analysts are also given the designation of business analyst, right? So it depends on what. So generally quant analyst, to become a quant analyst, you need to have a good understanding on statistics, because a lot of work is being done on data. A lot of modeling work is being done. So business analyst is just a designation for a lot of profiles in quant analyst, or it could be an IT analyst. So it depends on what kind of work does the
Right.
company requires you to do.
Okay. Thanks. I hope that answers your question, Venkat. Another question is, I have a good knowledge on finance, technology and stats, but don't have trading experience. I think that should be fine, as we discussed in the session. If you have programming knowledge, you can always pick up financial markets, uh, terminology and the basics of it on the job, or some kind of on-job training. But having good programming and stats background, maths background is a must. So yeah, so next question is, are there any popular strategies existing in quantitative trading system? As a technical analysis on capital market have its range of indicators which are extensively used. Uh, Puneet, would you be interested in taking this question?
So
Hello. Okay, I'm sorry. I guess Puneet is occupied. So I'll ask Suneet to take up this question. Strategies in particular, are there any popular strategies existing in quant trading system which are used, which are popularly used?
Well, I think most of the strategies fall into 6 or 7 groups, and
Mm-hmm.
beyond that, it's more or less fine-tuning that differentiates them. So, uh, I mean, like arbitrage is one group, and then options, market making, again, in option segment, you'll have maybe 2 or 3 kinds of strategies. But what differentiates strategy A from strategy B is broadly they would be the same, but uh, the fine tuning inside the logic itself would be different between different traders, different firms, and so on. Again, if you
Okay.
look at pair trading, it's the same thing. So it's essentially to identifying the pair and trading, but different firms might approach the same problem, and the nitty-gritties will be very different. But broadly speaking, there would not be more than 6 or 7 classes of algorithms that are at play.
Okay. Okay. Thanks, Puneet. Thanks, Suneet, for sharing that. Another question that I have for you is, what do you like to see on the resume for a strategist? I'm talking about medium to high latency strategies, so not very low latency strategies, but more on the basically probably more on the quant side.
Uh, so again, so there's a disclaimer here. I don't actually hire quants.
Mm-hmm.
So, but what I would like to see, if I were interviewing someone, is some exposure to machine learning and data science, which has become pretty necessary nowadays if you really want to scale.
Mm-hmm.
But beyond that, obviously there needs to be you need to be very proficient at some tool like R, and you need to your statistics need to be really good if you want to be
Right.
a quant essentially.
Right. Right. Okay. Another one, is there any platform for HFT where we can test the strategies in a simulator, in a simulated environment?
There are platforms actually. So, for example, there are quite a few Algo firms which actually open up their simulator as open challenges. For example, World Quant is one. They have a simulator that is called WebSim, which is open to anyone who can use the internet. And you could actually connect to it and trade on it. And if you perform really well, you apparently get an offer from World Quant also. So that's one example of it. And over and top of that, so that's been replicated in multiple firms now. But I think that's probably the most popular one right now.
Okay. Another one, what is the value of a CFA in quant non-discretionary side of money management? So value of CFA in this industry, is there any?
Well, I don't look for it at least. Again, I think Puneet is probably a better person to actually answer this if he's around.
Okay.
But
And
I personally
Swati,
don't look for CFA.
okay. Swati, can you share your insights on that? Hello. I guess Swati has also logged off.
Hello, can you
Yeah.
can you hear me
Yes, we
now?
can.
Yeah.
Yes.
So, looking at the jobs that we have got from the companies, we have jobs mostly for the trading side of the business. Now, if a person has done CFA, I'm not sure if he's really keen to do a trading job, but generally trading jobs do not require people to have essential certificates like CFA or similar certificates.
Okay, cool. Thanks so much. I have another question for Gopi. Actually, this is related to EPAT as well. Gopi, did QuantInsti help you in the placement? And how? Hello? I think Gopi has also logged off. Or I cannot hear him. So we'll move to the next
Hello.
question. Or yeah, Gopi, I can hear.
Sorry. Actually, the answer is yes, because they have a separate placement cell, with QuantInsti. Because I am from a background of IT, where I have worked in a BFSI project, banking and financial service project. And when I was planning to shift into the proper financial industry, that too into a front office, so I was just looking for, as a start. So with the EPAT, actually, you will because I'm from a quantitative finance where I will be knowing lots of valuations from the interest rate. I'll be knowing risk management, what will be a market rate or something like that. But I will not be knowing what is a market microstructure. And to be into the front office, you should understand what is market microstructure. So these are the things I was actually planning it. And when I was looking for where I should learn it, so EPAT was one thing which I was getting it, and when I was in Bombay at the time, so it was even convenient for me to go to their classrooms. So, and after that, I just got 3 offers. I think I converted the first one into a financial service broking house into the institutional equity division. So this is it. So to answer your question,
Okay.
yes, they
Yeah.
do have it.
Thank you so much for sharing that, Gopi. Next question that we have is, on a scale of 1 to 10, what sort of technical and software skills would trader come out of after this course? Swati, would you take that one? It's about EPAT. So.
So can you repeat that, Anupra, please?
Yes. On a scale of 1 to 10, what sort of technical and software skills would a trader come out after, would a trader learn after this course?
Right. So I'm assuming if you're a trader, you would already have an understanding of financial markets, or you'll be good at trading. You know how things are. You would be mostly doing manual trading. So now the most important aspect of EPAT is to help you get your trading strategies, convert your trading strategies into automated form. Now we do not insist you to completely get into automated mode, but yes, the quantitative skills, the technology that you learn here, you can start gradually using that, and build some of your some kind of automation you can bring in those strategies. So on a scale of 1 to 10, I think all the key skills required for a person to become an algo trader, to get a job opening, to get a place in algorithmic trading industry as an algo trader, we are 10 on 10.
Okay, thanks so much, Swati, for that answer. Okay, since we have already it's 7 past 10, we'll take three more questions. And for if we are not able to use, answer your question, we'll definitely get back to you later on email or calls. So don't worry about it. So next question is. My qualification is MBA and just pass out CFA level 1, 3+ years of experience in retail brokering as dealer, but I have no knowledge of programming. Okay, but I don't see a question there. If your question is whether you are suitable for this industry, definitely yes. Don't worry about it. Anyone who is interested in algo trading can learn and become an algo trader. So we move to the next question. Can EPAT program be for an entrepreneur from trading background or a freelancer? In what way it can help? Please advise. Okay, Swati, this goes again to you.
So if you are an entrepreneur and doing tradings, we have, if you see our website, we have a lot of entrepreneurs who were into trading domain, who are doing trading as a business, and they have learned automated algorithmic trading, automated trading, and they have implemented automated trading in their business. So if you're an entrepreneur, yes, you can start learning EPAT and get into algorithmic trading. If you are a freelancer and if you're a trader, now if you're looking from the job perspective, trading skills, trading understanding is the key to get into a trading job. Of course, you need to learn some programming tactics. You need to, learn statistics and get your, hands-on experience. So yeah.
Okay, thanks Swati again. Um, we are now getting only questions on EPAT. So I'll take one final one and then we'll close and say goodbye to and thanks to our panelists. So this final question is, can QuantInsti help a trader from a commerce background, example a CA, to shift towards algorithmic trading, especially if someone is looking for a job in this field? Swati, can you take this one?
So
Yeah.
yes, we have a lot of CAs who have taken EPAT and they've shifted to algorithmic trading. Now, why would a CA want to get into algorithmic trading and how suitable it is for them? So CA come from a very strong financial background. They have a very strong experience in accounting and similar stuff. So there are a lot of job opening that we get from financial firms, from banking firms, where CA comes as a requirement. So when you are a CA and you learn technical skills, you learn algorithmic trading skills, so you become a package for these companies. So if you're a commerce student, yes, you need to work on your programming skills. You need to get an understanding of any programming language, and of course algorithmic trading skills, and then you are good to go for any job.
Okay, great. Thank you so much, Swati, once again. So we are closing the session for today, guys. For all the remaining questions, we'll definitely get back to you on email or chat. I would like to once again give a big vote of thanks to all our panelists, Suneet, Puneet, Gopinath, and Swati. Thank you so much for sharing all your, candidly sharing all your wonderful experiences and insights. And we hope we see you back on the panel once again soon afterwards. Thanks, everyone.
Well, algorithmic trading requires you to merge two traditionally disjoint set of skills. One is finance, another is technology. So you need to merge skills in finance and technology to be able to do algorithmic trading. So you need to understand the markets, you need to understand big data statistics to be able to design your strategies. But once you have designed the strategies, you need to also understand technology to be able to automate your strategies. So therefore, That is where the QuantInsti's education programs come into place. So we train people about the entire gamut of operations and skills required to be able to be a successful algorithmic trader.